monetize that. For startup, hardly 1% in people in India knows it, and you are one of them, and invest it because of the ticketing size of
So
investment.
the first thing I would say is that startup investing is not and should not be for everybody. And I don't mean this from an elitist point of view.
Right,
I'm
right,
not saying this to say that, oh, somebody should not be allowed to. You should not, because of the sheer risks involved. And a lot of people don't understand that. Everyone sees that one startup that made it and thinks that, oh, I could get a 100 or 200 or 300 times return on their money. They don't realize that for every angel investor in this country who put their own money in for years and years and years, you made no returns, you made nothing. You'd see companies losing money and dying. And every investor doesn't get a successful exit. There are several of my friends who have made 10, 15, 20 investments, poured in 3, 4, 5 crores of their own money, and just never got that lucky exit, that company that just gave that money back. So it's not common, it's not easy. And I think that's why there are a lot of regulations around it. And there should be, because I've seen a lot of people who get carried away by the allure of get rich quick. I've seen a lot of people who, a lot of unfortunately slightly unscrupulous fund managers, people who have reached
hmm,
out to me on LinkedIn. I don't think they've even looked at my bio and
right.
then that I'm the wrong bakla to try and get for this kind of thing and said, yeah, we will guarantee you 30% per year returns, 35% per year returns. And I'm like, you can't guarantee.
Join us as we welcome Avik Ashar, a visionary investor at Artha Venture Fund. His journey from marketing associate to startup founder is nothing short of inspiring. Discover how he scaled Zilingo, achieving remarkable PL and fundraising milestones with a small, dedicated team. This conversation promises valuable insights for entrepreneurs and investors alike, offering guidance on navigating the ever-evolving startup landscape. Don't miss it.
Navigating the startup world, the power of vision, and so much. Thank you so much, Avik, for taking out your time. Thank you so much, Avik. How are you, Avik?
Hi, Cedric. Thanks for having me here. Doing great.
We've been discussing this podcast for a while. Finally, we are here. All right, let's get started. I have some questions lined up for you. Are you ready, Avik?
Yes, let's go.
Can you share your journey from a marketing associate to successful startup investor and founder? How this massive transition happened?
Sure. So, I mean, some part of it began pretty much before college, even. I grew up in the Middle East in Muscat, Oman, moved to India for boarding school, and post that, I went to college in Bombay, Jai Hind College for economics. After that, I joined Direct Eye, part of Bhavin Turakia's group, which later got sold for nearly $1 billion in total. So, amazing place to kind of start a career and get trained. While I was at Direct Eye, a family office in based out of Bombay, friends of mine actually from boarding school reached out as they were looking to invest in startups. So they brought me on. First, I used to basically spend my free time, so my weekends, helping them build the concept of what a family office should be, where they should invest. And over time, I realized that I've had a major passion for it, and they made an offer for me to join them full time and effectively run the office and invest in startups. So for the next 5 years, I was investing on their behalf across India and Southeast Asia. We invested in 42 startups together, including ones like Wellness Forever, which is a popular pharmacy chain, as well as Far Eye Technologies, a route optimization company, last funded for $100 million by DHL. So pretty decent outcomes, I'd say. After that, I moved to a company called Zilingo, which today has had its own ups and downs, and unfortunately doesn't exist any longer. But when I joined them back in 2017, they were the fastest growing startup in Southeast Asia. We specialized in fashion technology, so building solutions for the entire fashion supply chain. At that point in time, I moved to Bangkok, spent a year with them, followed by moving to Singapore to take up a leadership role and run 5 different geographies and basically build and expand teams across all of them. From there, just around when COVID happened, I noticed that there were a lot of challenges the business was going through and had certain disagreements with the way the business was being run. And my sincere advice to anybody listening is if you're not comfortable with the way a business is operating, leave. Try and change it if you can. If you can't, leave. There's the third option of just staying there in silence is quite painful. So I chose to leave and I moved out and built my own company in the insurtech space in Singapore. We were lucky enough to get a very, very small exit on that. So quite happy that we could at least make sure that our team members and vendors were taken care of. Post that, I joined a company called Janio, which is the ship rocket equivalent in Southeast Asia. Powers logistics for various different brands, including Nike, Swarovski, Disney, and more, all across the entire region. That was a real privilege to work with them and understand the ins and outs of logistics, not just at a parcel level, but even at a level of chartering planes and booking sea freight. I've always wanted to get back into the investing space. And in fact, while I was in Singapore, I made 10 angel investments of my own. And given the way India has been growing and the journey it's been on, I chose to move back and join Artha to invest in early stage startups.
So what exactly Artha does? It's a You've been a investor in this firm, right?
Yes. So Artha Ventures operates 3 different AIFs. We had our seed fund one, which was a $33 million fund. We fully deployed that for first checks. We have a seed fund two of 60 million, which we are currently investing from. And we have a growth fund of 50 million, which is there to support all of our winners from our portfolio.
Any future plans for IPO or for Artha Venture?
Maybe it's something that's definitely possible in the next
Because
time.
it is doing a fantastic job. I mean, whether it's for investors or whether it's for business.
Yes, as a typically venture funds don't end up IPOing, but in this particular case, the way Artha Group is being built out, it's not venture funds. There's pre-IPO funds. There's an energy fund which invests in solar and wind assets, so basically renewable assets. It's a multi-asset class holding company, so there is definitely potential.
So, Avik, when you were starting out your career as a marketing associate, have you ever imagined someday you will be successful founder, investor, and entrepreneur?
Hope, but didn't dare to put myself there. I didn't really think that I'd get on the like investing would be the path my life took me down. It's the absolute privilege of having invested for the family office that got me addicted to the entire space.
So, Avik, you are an inspiration. At very young age, you've been investor, founder, and entrepreneur. What inspired you to make transition from marketing to entrepreneurship?
I think it was opportunity. I mean, from marketing, I actually moved to investing. So for 5 years, I was an investor. So that was kind of the middle ground. And in that, I just completely enjoyed working with founders, evaluating companies. And then I realized very quickly that to become a better investor, you need to have built something. There are several investors out there who have been investing without building anything. And I think it's evident to everyone which ones those are and what the results have been there. So for me, it was very clear that if you want to be a very good investor, you need to understand exactly what it takes to get a business off the ground. What are the pitfalls? What are the perils? Where can startups deviate and how do they transition from becoming an idea to a startup to becoming a business? Because at the end of the day, the goal of all startups should be to become a real, sustainable, profitable business.
So, how different investing in startup and investing in stocks, it is how different it is, like because in at least in stock market we have track to company, we have data, fundamentals to look at, so many data is there. For startup, hardly 1% in people in India knows it, and you are one of them, and invest it because of the ticketing size of
So
investment.
the first thing I would say is that startup investing is not and should not be for everybody. And I don't mean this from an elitist point of view.
Right,
I'm
right,
not saying this to say that, oh, somebody should not be allowed to. You should not, because of the sheer risks involved. And a lot of people don't understand that. Everyone sees that one startup that made it and thinks that, oh, I could get a 100 or 200 or 300 times return on their money. They don't realize that for every angel investor in this country who put their own money in for years and years and years, you made no returns, you made nothing. You'd see companies losing money and dying. And every investor doesn't get a successful exit. There are several of my friends who have made 10, 15, 20 investments, poured in 3, 4, 5 crores of their own money, and just never got that lucky exit, that company that just gave that money back. So it's not common, it's not easy. And I think that's why there are a lot of regulations around it. And there should be, because I've seen a lot of people who get carried away by the allure of get rich quick. I've seen a lot of people who, a lot of unfortunately slightly unscrupulous fund managers, people who have reached
hmm,
out to me on LinkedIn. I don't think they've even looked at my bio and
right.
then that I'm the wrong bakla to try and get for this kind of thing and said, yeah, we will guarantee you 30% per year returns, 35% per year returns. And I'm like, you can't guarantee anything in this
Right,
business.
right, right.
And secondly, it's a violation of the SEBI laws of AIF to guarantee returns in startup investing. So, like, how are you doing this? And they're like, "Well, this is our problem. You worry about making money." And I was just shocked. Um,
Because they are selling anyway, they want to sell it, just keep on
uh,
selling it.
I will share that I did report them, and I feel very good about that because they may just find some person who doesn't understand the real risks of startup investing, a very
Hmm.
high chance, and then take their money, and then that person will be just left without it. So the difference between investing in startups and investing in stocks, the first one is startup investing is illiquid. Any money you put in a startup today, you have to just assume that you're not going to see it again. And that's from an angel perspective. From a venture fund, we know the risks involved. We know how to guide our companies towards an exit. We know what's going to happen. And even then, at an early stage level, where we where we invest, so at Artha, we typically invest in about 30 to 40 companies. That's generally our fund size and the way we built it. We know that we are going to write off at least 16 of these companies, if not more. And we understand that. And that's the risk tolerance that we've built in. Um, so the first thing to understand is that when you're putting this money in, it's effectively gone. The second is it's illiquid, means you cannot withdraw it when you want. Any money in the stock market, you can sell your shares today,
Right,
get
right.
into be credited back into your account by tomorrow. It's perfectly liquid.
Illiquid means 3 to 5 years, or any duration is there.
See, a startup investment, there is no guarantee on a return. There is no guarantee on when you'll get an exit. If you'll get an exit, nothing.
So much risk.
If that startup doesn't raise more money, it may die. If that startup does not manage to sell, you will not get an exit. If that startup does not IPO, you will not get an exit. So your money is stuck. So you can put that money in. It's very easy to write a check. It is very hard to get a return. Yeah, I think those two would be probably my biggest points of the differences. I mean, there's a whole bunch more in how you evaluate, what you
Right.
think about, how you value them, how you look at their numbers, how you value their future potential. But these are probably the two most important points someone should remember.
Abhi, how did your business experiences at Zilingo shape your approach to business today? Sorry.
I think I was both fortunate. I would say fortunate. I always look back on anything that's happened to me and be happy about it because it shaped who I am today. I look back on the time and I say I was fortunate to witness a period of time when venture capital funds, some of the biggest venture capital funds in the world, had lost their minds. There was zero interest rates in the US. There was this exuberance of just throwing money around and looking at valuations grow, and fund A will put 5 million in a company, shake hands with fund B. Fund B will put 20 million. Fund C will put 50 million. Fund A will come back and maybe put 100 million. And everyone is patting each other on their backs, saying, look, our company is worth $1 billion. That company is not worth $1 billion. That company is losing money every single day, has not figured out what their product should be, has not figured out how they're going to ever make money in their lives. And I think we've seen what happens to those kind of companies today when you have thousands and thousands of people losing their jobs. And
By just, yeah, recently, right, right.
examples like that, and you see a lot of pain happening in the ecosystem. And suddenly these same investors pat each other on their backs and stand together on a stage and say, we must be very careful
Hmm.
and we must do diligence.
Right.
The very same people who, back when everything was crazy, patted the startup founders on the back and said, go beta, spend money, throw money, burn money. So I think those are very important points to remember. And I saw that happening in Zilingo. I saw what happened when startup investors. I also saw one very important thing. Most investors
Hmm.
face zero consequences.
Why do you
They,
say that?
they still have their funds, they still have their
Hmm.
jobs, they still have their extremely high salaries. Whereas everyone who worked for Zilingo, and I know a lot of my colleagues were left in the lurch. Luckily, I had left by then. A lot of them were stuck. A lot of them didn't get paid their last few salaries. A lot of them were, during the worst time of COVID, were not covered for their health insurance, were not covered for their medical insurance, were promised things and weren't given them. So I could, and all the while, the investors earning their salaries, very
Hmm.
comfortable, no consequences. So I think at that point in time, it really struck me that that's never an investor. That's not the kind of investor I want to be. I don't mind being hard on founders. I don't mind being hard on a company, but I'm company friendly. Everything I do is for the good of the company. And if the founders recognize that their wealth is going to be created from the company, then they would realize what I do is for their good as well.
Avik, what are the some biggest challenges you faced while scaling up Zilingo?
I think one of the challenges, and this comes back to investors again, is the expectations of some investors and the expectations of how they want you to grow and the speed they want you to grow. Businesses take time to build, especially when you're building in a B2B business. I think it's very important to recognize the types of business you're building. What is the method of scaling that business? What do you need? How long does it take to build a sustainable growth pattern? How do you understand who your customer is? What are you solving for them? I think those were some of the first challenges. The next one was operating in so many different countries at once. Every country has a different cultural aspect. You're operating how you deal with your team in Indonesia versus Thailand versus Philippines versus Bangladesh versus India. Everybody's absolutely different. Hell, India, when you're dealing with someone from Delhi versus Bombay versus Bangalore versus Tirupur versus Ludhiana, every single person, every single culture is absolutely different. So I think cultural balance was one of the hardest things to deal with. The second one was to build out. We were building in the textile space, so we were working with entrepreneurs who have built amazing companies, but they are very, very set in their ways. New technology was effectively something they didn't want to embrace. Trusting a startup to come
Hmm.
in and help them improve their processes, to be able to sell to them or to be able to buy from them. Those levels of challenges just to build trust with those textile companies took a lot of time. I think the next part was learning myself because when you're growing at a startup, you're growing so fast, you have to spend a lot of time on your own personal learning and development. because you're now from like at the age of 26 or at the age of 27, I was suddenly a people manager, and my team just grew exponentially every year. From 5 people in the same year, it goes to about 20 people. Within a few years, you're suddenly managing 50, 60 people, and being able to scale yourself that quickly without any support, without any guidelines. Typically, when you do this in a corporate path, they have they're very strict processes on how to help people become managers, how to improve them, how to teach them. They're learning and
Mm.
development. You're learning from people who already know how to do this. In a startup, you don't. So I think that was another very challenging part for me.
It was challenging, although it was a learning phase. You mastered it because you had a fast track to career. Uh, this brings to the next question, Avik. How do you achieve such a big amount, 100 million at Zilingo? 100 million, we say, it's a huge amount.
It was GMB, so of course this is the amount of products that are being sold on the
Mm.
platform. It took time. It definitely took a lot of time, and I think that one of the craziest hacks that we ever used was we just went and uh, partnered with the Textile
Mm.
Association. We started offering them in the beginning. We even went and said, hey, literally we'll take 0.2% commission, which was unheard of. Barely covered, didn't even properly cover the payment gateway or the bank charges in the beginning, and then we scaled, and then we took it from there. So it took a lot. Our teams were consistently. I think I lived out of a suitcase for nearly 2.5 years
Mm.
to get there.
Because at that time you were very young. Still, you are in your 30s. So, can you discuss the importance of team dynamics in achieving business success?
You need to build a team that you can trust. I personally believe in a smaller but more competent team. So I think just having numbers to throw at things isn't good enough. You need to really invest in your team. So let's say I had a budget which could let me hire 50 average people or 10 very good people. I would completely use that budget for 10 good people, because I think that 10 really strong team members supporting you is much better than an army of people you have to effectively micromanage. Uh, the next thing I think is learning to let go and learning uh, how the different phases of delegation. How do you slowly start giving a certain amount of your work to your team members and ensuring that you're setting them up for success? You're not just dumping work on them, but you're giving them work that they can handle. You're being there to support them. You're acting as a safety net in case they make a mistake. And you also have to be comfortable with them making some mistakes, which will happen. People don't learn without the flexibility of making some mistakes.
You are the like I think the first one who is saying honestly, like at some point you will make mistakes.
It's going to happen.
Okay.
Uh, and as a manager, you have to plan for that. You have to give your team room for that and be there to help them support and obviously rectify and kind of solve the problem as well.
What key metrics you focus on evaluating a startup?
The very first is the numbers. I mean, and this is the way I think any startup founder should pitch their startup. If you have the numbers, you should pitch the numbers. Because if your numbers are amazing, everybody will want to talk to you and everybody will want to invest. If you don't have the numbers, then pitch the traction. Do you have uh, proof of concepts going on with large clients?
Hmm.
Do you have letters of intent from companies who want to use you the moment your technology is ready? Do you have memorandums of understanding, MOUs, or partnerships from large distributors who say the moment you've built something or you've solved this, they will distribute your product? So that's number two. If you don't have that, then I look at the team. And the team is always going to be an important part, but this is my pathway of how I look at a company. Then I look at the team. And if the team is amazing, if they have the right background, if they know exactly what they're building, if they've come up with a beautiful plan, and more importantly, they understand the pain point they're solving for. Like someone who spent 10, 15 years in a particular industry knows exactly the problems, knows who their customers are going to be, knows exactly how much they would pay, knows how they're going to scale this from a 1 million to a 10 million to a $100 million business. Then that's the third thing I look for. And if you don't have that background, then if you don't have any of these first three, in my opinion, you're going to have a hard time fundraising. Then I look at number four, which is how well you tell a story. I generally don't fund number four, where people are just standing there telling me a very nice story.
So you don't believe, like, generally you don't do it for number four.
I don't do it. I don't do it. I know that there's a massive surge of people saying, oh, yeah, young entrepreneurs, children entrepreneurs, college entrepreneurs. If you look at the real success rate, and I put up a post on this, the
Yeah,
real
you have,
success rate of entrepreneurs between
right.
their is in between 30 to 40. Those are the most successful entrepreneurs that are out there. Sure, you have one kid who started a business at 18 or 19, but for every kid like that, you have 100,000, a million who fail. And as an investor, I am looking to maximize my success outcome. I'm not doing this out of charity. I'm not doing this out of some kindness of my heart. I'm doing this because my investors have trusted me with their money to invest in startups to get them a return. So I am obligated to invest wherever I get the highest chance of success for them.
Avik, when you're investing in a startup, you are investing millions of dollars, I'm saying. So how do you get courage? I mean, it's not like even lakhs. I'm saying $1 million you are investing in a startup. So how do you derive that courage to invest?
I mean, it's a profession. It's what we do. It's the same kind of thought process that a mutual fund manager, a real estate investment manager, anyone in the finance space comes up with at some point or the other. You do detach yourself a little bit from the numbers. You're not completely. It sounds obviously when you put the numbers down there, it's a very, very large amount of money. But you have to detach yourself and understand that this is your job, this is a business, this is what you're running, and that's where you come from. You also, I mean, at the end of the day, you also know that when you're investing this on behalf of the people who have trusted you with their money, you're doing it so that you can turn that 1 million into 5 or 10 or 15 and give it back to them.
That is the expectation, 1 to 5 or 10 million.
So the typical expectation from a limited partner in a venture fund is at minimum, you need to generate at least 1:4 or 1:5. If you don't do that, at the end of that 10-year cycle, if you've not given back 5 rupees for every 1 rupee you've been
Hmm.
given, you have not done very well as a venture fund.
How do you look for what things do you look before investing in a startup? Like
So I
what
already
exactly you look for? Uh, is it sector? Is it trending part or any kind of
uh, okay, I love the fact that you said trendy part. I look at trendy part and then I push those companies away. Uh, I don't believe in investing in trends. I think that anyone who does, good luck to their investors. Um, I look for fundamentals. I look for, are you solving? So Artha has 6 principles, and I think that because I mean, I've known Anirudh for about 12 years, I resonate with all six very clearly. My favorite one, my favorite two from those six are they solving a real human problem, and are they using technology to enable scale that's otherwise not possible? And when I say this, I basically the first one is very fundamental to me and I don't mean impact. I mean, definitely we do look at impact companies. We do look at companies that are solving for rural, for agriculture. But my point is, are you solving a problem for somebody? a problem where if you didn't exist, they would feel a gap, they would feel a need, that hole would still be there. It's not that if you didn't exist, chalte rahega, life is good, life is great, nobody cares. And for example, my favorite way of viewing a company, one of my ways of viewing a company is today, if you suddenly disappeared, number one, would people be upset? Number two, would somebody jump and try and build something to fill that gap? It's a great way to look at companies because um, it tells you whether you are a need or just a good to have kind of business. Then, of course, we do very formal due diligence into the company. So, legal, financial, we go look through the books with a microscope, check every contract, check every single thing about the company from the time of its incorporation. And I mean, no company in India, startup that has ever crossed my desk has got 100% level of compliance there. That's our job to help them get there. So that's the second part. Yeah. And obviously, the third part is I want to experience. So I'd either use the product myself, use the technology, talk to existing customers, both from the referrals from the company as well as do my own independent research.
So
And
you,
then take a
being
call.
an investor, also you do this kind of deep research.
That's our job.
Avik, Artha Venture Fund is a successful company. So how technology played a huge role to leverage opportunities.
So I think what technology does is it allows us to streamline our internal operations a lot better. So we use, for example, now when we want to talk to companies, we give them a form which directly goes into our CRM. We've customized the CRM a little bit to exactly what we need. Within that CRM, there are different rules, there are different parameters. It assigns it to different people in the team at different stages. So let's say that now I've moved it to my legal team to prepare a legal document to send to the startup. It'll allow me to actually track how long that's taking. And let's say that we have agreed that it should take 5 working days, and suddenly it's taken 10 working days. Then we actively on a monthly basis sit down and try and evaluate why that gap happened. What took so long? Was it an information gap on our end? Did maybe somebody was on leave and just missed it? And if they were on leave, it should have been assigned to somebody else. So we use technology to streamline our operations as tightly as possible.
What sectors are you most excited about investing in right now?
I honestly just love everything. I am sector agnostic. I don't definitely don't love EV, I can say that. But beyond that, I think there's a massive evolving upper middle class moving towards premium. So I think the first thing is obviously premiumization that can be solved for people who are now becoming more aspirational. Indians who suddenly have access to disposable income they didn't before, who have traveled the world, who have now come back with higher demands, higher expectations, saying that, hey, we want the same kind of things that we've seen around the world. We want that quality of of housing, of food, of transport, of air, of amenities. So I think that there's a huge amount of scope to cater to that. The second thing that I really love, and I was at iHub in Gujarat yesterday and day before, and I looked at it was an impact investor summit. And while we're not focused on impact, it's definitely a key important theme for us. And I saw companies built by people who are real grassroots entrepreneurs. They have gone down to village level. They understand the pain points. They understand the problems, and they have built bootstrap. They have built companies that are doing 10, 15 crores of revenue profitably in 2 and 3 years. And these are children of farmers who have studied hard, who have done tuitions, gotten scholarships, gone to major cities, worked in the corporate sector, and then moved out to build startups that can help the villages they came from. And the thing that really stands out to me from this trip was when I'm in Bombay, or Delhi or Bangalore, I keep meeting these extremely privileged, and I'm one of them. I definitely acknowledge that I've come from privilege. I meet other people who start whining and saying, "Oh, I can't get this pre-seed funding, so I can't start a company." I'm like, yeah, these entrepreneurs have gone and built village village level businesses doing 1 million plus profitably in a year or two, and you're crying because you can't get the pre-seed funding that you think is your birthright.
That's a perception out there, right?
Shocks me. It shocks me.
You're saying like because there's a huge opportunities in India right now where startup.
What I was basically saying is that I think that there are a lot of problems to solve. And oh, another thing I don't like investing in. The fifth clone or the sixth
Hmm.
clone or the seventh clone of something nobody needs, where you're not solving a problem. Every time I see anyone trying to create the next quick marketplace, oh, let me build an influencer marketplace, let me build another, let rent a car marketplace. I'm like, yeah, nobody needs this. You're not solving any problem for anybody. You're trying to become an entrepreneur for the sake of entrepreneurship because you think it's going to make you a millionaire. Don't do it. Just don't build it.
Just a
Uh,
waste of time it would be.
Waste of time, effort, money, energy, complete waste. There's so many real problems out there. Go solve that.
How important, Avik, is the product market fit when considering an investment?
See, that completely depends on stage of investor. Now, where we come in is we are a seed stage investor, but we are very biased towards companies who have figured out basic product market fit. I want to see that you have understood who your target market is and what you're building for them and why they need it. And I think that that's kind of crucial. That's absolutely and desperately crucial for a company to achieve as fast as possible, because that's when you know why you're taking funding, you know what you're going to use it for. Anyone who's sitting and saying, I want money to figure out my product market fit, I'm like, yeah, nahi. Go figure that out first. Figure out who's going to pay you, how much are they going to pay you, and what does it take to get that money, and then I will invest.
Avik, how do you foster innovation within your team?
Within our team, so we actually have a reward system. So if someone comes up and solves, we actively have a few problems that we keep posting up at an organization level, and we just offer straight cash rewards for anyone who fixes that problem. So over and above their actual jobs, if we have any problem, like organizational level problems, like, hey, we would like to figure out how to streamline one particular our entire legal framework or our financial repository of companies, or how do we engage with our startups on a monthly basis to get data in a better way that becomes easier for the startup as well as better for us to visualize that data. These are just examples of some of the kind of challenges we put to the team. And we put an open monetary reward next to it. And if someone spends their spare time and works every Sunday and builds a solution to that, we pay them.
Avik, you've been a successful leader, uh, investor. What leadership qualities do you believe are essential for startup founders?
You should be the dumbest person in the room. A startup founder has been you definitely are the person who's building up the company. You're kind of guiding the direction. You're deciding where this company is going and what it's what I say. So you over time, as you grow as a startup founder, you need to want to be the dumbest person in the room. You want to surround yourself with an amazing team, people who can support you, people who can help the company grow, people who are better than you at particular specific tasks. You want a great technology head, a great finance head, a great sales head, and you should want to bring these people in. So having that lack of ego or humility to recognize that and bring these people in is very important. The second one is accountability. At the end of the day, a founder has to know that they are accountable for the company. Whatever happens in the company, it's at the end of the day their responsibility. So when I was building Jam, and there was 100% price increase because of COVID and China's squeeze on chipsets. Yes, I mean I was blown away. It was an externality. It was something that I couldn't control, but I was still responsible to the team. I mean, if I go and sit with the team and start crying and say, "Yeah, okay, we're in a bad place now because of this," the entire team is going to crumble. So at the end of the day, you are accountable for things that are in your control and for things that are not in your control. Um, so I think that's really important. Um, Resilience is definitely one big piece, but with resilience, I will add. So while it's really, really important to have the grit, the energy to just keep pushing and pushing and pushing and pushing to try and build, it's also important to recognize that if you're trying the same thing again and again and again and again, and it's not working, you have to have the humility to accept that maybe what you're trying is not the right thing. That's when companies typically change course, or in today's jargon, pivot. Is when you realize that hey, what you're trying wasn't working out. You may have the right team, you may have the right people around you, but the market that you're targeting, maybe they didn't need the solution. You didn't validate the product market fit well enough. You didn't find customers who desperately needed that solution that you were building out. Could be, or maybe the market's changed. Maybe some new technology came in and solved that problem. Uh, so you have to be willing to admit that that particular piece that you are working on may not have been wanted. It doesn't mean that you give up completely on entrepreneurship. It just means that you go much deeper to understand where your gap is. Is it because of your product? Is it because of customers' lack of information? Is it because of customers' lack of need? Is it because of the lack of willingness to pay for that solution? You have to figure that out.
One should able to accept what are the shortcomings, what are the setbacks.
Yeah.
Right. How do you handle setbacks and failures in your entrepreneurial journey?
There are a lot of them. I think it's really, really important to surround yourself and not lose touch with your family. They're your first support system, your friends. And as much as possible, keep some time out to exercise and just have fun. For example, I'm not a big believer in Narayan Murthy's 70 hours every week.
Right, right.
I think that businesses are built as a marathon. Or more importantly, I think the Tour de France, cycling is a better example. There are points of time when in that 26-day cycling race where they sprint. There are times when they are sprinting really hard, really fast. They're cycling at 45, 50 kilometers an hour. And there are times when they're just cycling at 10 kilometers an hour. And you need to balance both. Because if for 26 days, if you ask even Lance Armstrong to cycle at 40 kilometers an hour, he will die by the second day. And I think that's very important to remember.
Striking on the balance, that is important, right?
Yeah.
Can you share a specific example of a tough decision you had to make as a leader, as an investor?
As an investor, I'd say within the last 6 months, I had to choose not to continue funding a company. And it's a hard decision because you get very
Hmm.
close to founders, you build a very deep relationship with them, and you always want to support them. I mean, I think one part of investing is optimism. We, we're crazy people who think that the founders we invest in can change the world, which means that we have the belief that that world can be changed, or something can just work. But at the same time, I have to be conscious of my financial responsibility to my investors. I have to decide where I'm going to use my limited resources. Do I support company A or B or C? And the truth is, I can't support them all. It's just not possible within the fund, within what we have. So I have to choose, do I where do I draw the line and which companies do I choose to continue supporting and which companies do I have to stop supporting? And it's a very tough decision.
Avik, you've been connected to global leaders across the world. What marketing strategies you found most effective in scaling up a business?
Referrals to me still seem to be the absolute best.
Referral, you're saying in this still in this digital age.
There is nothing like a warm referral to
Hmm.
make an introduction, to open a door, to get something moving. Nothing like it. You can have 100 different marketing tactics. You can have ads, LinkedIn outreach, cold outreach, X outreach, Y outreach. Nothing is more effective than a warm referral. I mean, product. I will caveat that with product usage. So the second thing is, I mean, if someone uses your product and says, "Hey, I love this. I want this," that's equally effective. So I wouldn't say nothing. I would put both of them in the equivalent space where warm referral and trial of product would both be in the same space. Those two are the most effective methods of outreach.
Yeah, you were 100% right. Zero the able to scale up because of word of mouth. Like as you mentioned, it still exists. How important is data analytics in your decision making process?
Very. As a financial investor, we have to look at the past historic data of the company. We have to look at the competition analysis. We have to look at the current sector, what's happening in the current sector, and all of that goes in. It plays a pretty large part of our investment decision as well. That how is the sector growing? Is there headwinds? Are there tailwinds? Are there regulatory issues? Like for example, right now, I mean, I have a lot of empathy for people who are building in the fintech space because, for example, as a founder, my business was crushed because of regulatory, I would say regulatory, but changes that I couldn't control, which was the price of chipsets increasing.
Hmm.
And similarly, today you have a whole bunch of fintech founders who are just struggling because RBI is not giving very clear guidelines on what they are expecting and what they want. So you have fintech businesses that have built up, I'd say some very, very interesting and innovative businesses that are just today struggling to maintain customers, to operate, to get funding, because all investors are scared as well. We don't know whether tomorrow, if one rule change is going to come out, which will kill a company. So we are also very, very scared of investing.
See, these guidelines like can be skeptical at certain point of time
What do you
when
mean?
it's SEBI or anything.
See, I'm talking about the RBI one. Like for
RBI.
me, I can't, let's say that I am investing in a company which is in a gray area where tomorrow, if RBI makes one different ruling, that company is going to die. I'm going to have to think 100 times and probably not invest in that company. Or give it a very low valuation, take a lot of percentage so that I have priced my risk in. So those are the one of the two things I'll have to do, either not invest or be very, very tight on the terms that I invest.
So, Avik, when startup founders reach out to you, Avik, come on, let's invest in my company. What what is in your mindset whether to invest or not? How do you approach, or you just 90% of time you just shut down the deal? How it goes on?
No, yeah, I mean, at the end of the day, we are optimists. It's our job
Hmm.
to look at companies. It's our job to evaluate. The last thing I want is to miss an amazing company ever. And personally, I give my free time for this as well. I spend
Hmm.
more time than, I mean, it's not a job for me. It's a calling. It's something that I love. Spending time with founders and learning about their businesses. More often than not, whenever I get cold outreach, and there have been some amazing cold outreach companies. There's been one that I'm actually currently in the process of investing in. I can't name it until we're done, but it came from a cold outreach. So sometimes they're brilliant. But more often than not, the ones that come via cold outreach, I will have to say are not wonderful.
Might be hype is there or something expectations.
There's a lot of expectations. They've clearly not spent any time reading my profile or anything I write because I'm very clear. I've written exactly what kind of companies what I expect when a company comes to me, how I want to be talked to, what are the points you need to put into a message to get my attention. And the moment I don't see any of that in a message, I automatically shut down because I know that if this founder has put so little effort
Hmm.
into reaching out to me, they are probably going to be very bad salespeople. And if they're very bad salespeople, they're not going to be successful founders.
The intuition, you can derive that intuition when they're messaging you, right?
Yes.
Can you discuss the role of social media in today's marketing landscape?
I think it's very important for every brand to have some form of a presence out there. It's kind of the first level of filtration anyone does, especially for a new brand, and it's not limited to D2C, it's any B2B services, anything you're building. Today, you need to have a certain amount of social media presence because it's just something that builds credibility. I also feel that it's a very good way to get your brand's positioning, what you stand for, what you're doing, what you're building out there. And there are enough relevant audiences for virtually anything in the world. So if you're building for a very specific audience, I think that the social media is one of the most powerful tools. And I mean the more organic content. Of course, paid media helps, paid socials help, but your organic reach just increases exponentially. I think it was impossible. Like, I mean, back in the days when people had to literally do like knocking on doors, I think social media has now amplified the kind of reach that you can have. And if you're building in the software space, hell, what before the internet, how could a company in India sell to a company in the US when you have five people and you're operating in a garage? Today, a small 5-person college startup can sell to a customer in Europe or in Australia or anywhere in the world because of the power of internet and social media.
Avik, you mentioned your profession, you enjoyed what you do, you love what you do. Whether it's you, Elon Musk, or Jeff Bezos, you people are passionate about what you are doing. So, what advice do you have for startups looking to grow their brand awareness?
First of all, hopefully you're doing what you love. If you don't love it, don't do it. And secondly, find other people who love what you're doing. Your audience, your ideal customer is not the 99 people who don't like what you're doing. It's that one person who likes what you're doing. So figure out and that, if what is growth optimization, growth marketing, growth hacking, all of these terms effectively boil down to fancy terms for finding that one person, that one customer who resonates with you, who likes what you're doing, who wants what you're selling. So everything is about figuring that out. That's your product market fit, that's your go to market, that's your growth hacking, your growth optimization. So figure that out and figure out how to reach that person. That's what it is.
To figure out, one has to do some research. Either it could be on fields or it could be on data.
See, I think research has become an overhyped and
Hmm.
over analyzed term. Go sell. Speak
Okay.
to 100 customers and try and get them to pay you money for a product. If 99 of them say no, and the final one maybe just says yes and then drops off, you don't have a product that anyone's going to want. You don't need research. That's research. Now, that will tell you one of three things. Your product's not good enough, you're not targeting the right people, or you're not targeting the right customer segment, or your outreach is broken. So either they're not understanding what you're doing, you're targeting the wrong person in the company, you're targeting the wrong stage of company. Like you're building an SME software and you're trying to target an enterprise, or you're targeting building an enterprise and you're trying to target a kirana store. So that sales is the best research you can ever have.
What trends do you see shaping the future of startups and investing?
Shaping the futures of startups, I think it's never been an easier or better time in the world today, especially in India today, to try and build a company. You have the assistance of AI, you have the assistance of no code, of low code, of uh, Jenny, I can help you kind of build out your early stages of code. You can build an MVP, you can put it out there. You've got government grants that are coming in, like massive amounts. You have incubators, MITI, and a whole bunch of other initiatives that have given like hundreds and thousands of crores to incubators and accelerators across the country to help people get access to that early stage seed cap, like idea capital. So that because I understand like taking the plunge and quitting your job is a function of privilege. So everyone doesn't have that, which is also why I think older founders tend to be disproportionately successful because they have a little bit of a buffer, they have some comfort zone. Whether you came from a humble background or a rich background, if you have worked for about 10 to 12 years, hopefully you'll have some savings that you can fall back on. If you haven't, I would also suggest entrepreneurship is not for you.
This is like open advice to all, right? First, once you figure out about themselves, right? Right. It's a big message. Have you highlighted, Avik? How do you think AI and technology will impact the startup ecosystem?
I think that it is not exactly replacing jobs, it's making jobs more efficient. So I think that every single person today should be figuring out how they can improve their productivity with AI. If you don't, you're going to lose out to the next candidate or next person or next company who does. If there are two startups, both of them competing, and one of them has figured out how to grow with 10 employees and the other is still operating with 100, the one with 10 is going to win because your cost structures are leaner. You can lower your price without reducing your margins. You're going to win.
What role do you believe sustainability will play in future investments?
I think that sustainability is going to be very driven by global fund flow of funds as well as regulation. So, for example, I put out a poll a couple of days back, and I think there were 180, 190 votes on it so far. And about 40% of those votes say that people are not going to be willing to pay anything extra, whether in a business or personally, for something that's sustainable. So I think that sustainability is going to be a definite piece of pressure that has to come from a regulatory angle. Of course, you can ask people on the street, would you be willing to do it? Would you do it more? And people will say yes to feel good. Companies will say yes to feel good. Ask a company to increase their prices by 10% and see what happens to their sales. When you're saying it's for sustainability, my bet is it's going to drop.
Because price is what you pay and value is what you get. Uh, in India, people are obsessed with price. How do you see the landscape of venture capital evolving in next 5 years?
I personally feel that a lot more operators, a lot more people who have built things. Now, whether you built it in a corporate career, whether you built it in a startup, I don't think that there's, of course, slight differences, but I think all of this is equally and amazing. Whether you build it in a family business, all of these are equally valuable. And I think that there's been a slight career shift because until now, a lot of VCs used to come from banking, from investment banking, from consulting. Now, the key feature, especially of banking and investment banking, is they've never built anything. They're masters of Excel. They move things around left and right and up and down and can make beautiful spreadsheets, but they've never built anything. They don't know what building anything is. Consultants occasionally do build things if they've gone deep on a project, but more often than not, they build very, very nice PowerPoint presentations and very nice Excel sheets. And then they give it to a company and then now say, go now do whatever I put here. And whether it works or not, nobody knows. So I feel that there's a big shift coming where people are moving away from to even in the investing community, people want investors who have built things. So I think that's a big shift.
Right, right. You are very right on that. But people are nowadays, whether it's venture capitalists like you, or if we can say like in stock market also, people are approaching like investors like idea. Who has been your biggest mentor and how they influenced you?
Um, a very close friend's father, Karan Singh Thakral, he's the CEO of a very large Southeast Asian, actually global family business group. And I think we've had every single time I've sat down with him, and we used to have kind of every quarter sit down and have sessions. And they were rare. Sometimes they would revolve around specific business problems, but mostly if it was a specific problem, I just call him up and ask him for his advice. But if it was our sessions, which we do every 3 months, were more about his views on, and I would just question him on how he built his company, how he built his empire, what are the lessons that he learned, what are particular ways, and it would always go around something specific. How do you incentivize your team? How do you build a growth structure and a growth path for your team and make sure that they can grow? How do you innovate? How do you defend from competition? What do you value? How do you define what value is? I think one of the biggest pieces of advice he gave me was I don't ever spend money on fancy belts and shirts, but buy the most expensive mattress you can afford. Because you spend 8 hours of your day on a bed, you
Yeah.
should be the best damn bed you can afford.
In a way, it is investing in a way investing in your health also.
Invest in
Take-
your health, invest in yourself. Don't invest to show other people that you look good.
Avik, you had a fast track career. You've been a successful investor, founder, entrepreneur. What books or resources uh, have had the most significant impact on your career?
Great question. I think there definitely be a couple of them that I should call out over here. The first one, funnily enough, as much as I keep joking about consultants, is a consulting case book. It's called Case in Point. And I love it because it just it sharpens your immediate thinking. It really makes you understand mutually exclusive and collectively exhaustive, MISI as a concept. How do you think? How do you do what's called first order or first principle thinking? Um, that's a book that's really shaped a lot of how I think. The next ones would obviously be kind of the Bibles. So Zero to One and the Lean Startup would definitely be in there. The fourth one would be a book called Predictably Irrational by Dan Ariely. It talks a lot about behavioral economics and how important psychology is when it comes to building anything. And because at the end of the day, any business is out there to make money. To make money, you need to convince somebody, whether it's a business, whether it's a person, to pay you that money. And what is one of the most important things to understand is how do people think? So I feel that it's critical for anyone who wants to build anything to spend time on behavior, on psychology, on behavioral psychology, on behavioral economics, just to understand what makes people tick, what makes people think, and how do you then convince them to spend that money with you.
So these books can open up their mind as well. How do you maintain a work-life balance as an entrepreneur and investor? Because you
I
have a
haven't figured
busy
it out.
schedule.
I haven't figured it out yet.
You've been very honest, to be precise, I would say. Uh, what motivates you to keep pushing forward in your career? Uh, because one thing I observed, whether it's you or Elon Musk, Warren Buffett, you people are mentally sharp. How do you generate that kind of mindset?
Curiosity. I think I'm just damn curious about things. And I mean, for me, I'm not I mean, I love that you mentioned me in the same breath, but for me, a second driver right now is definitely money, because I'm not anywhere close to there. And I think that it's very important to remember that the sad truth is money can buy very close to happiness. I guarantee it can solve
Right.
90% of problems in almost anyone's life. Not 100, definitely not 100, but it gives you money is effectively buying time and freedom. Tomorrow, if I want to take 6 months, I mean, assuming I get to where I want to be, if I want to take 6 months off and just become a bartender in Puerto Rico, money gives me that freedom to do it. Buy a visa. Hell, if I want a visa as an Indian, it's a bit hard. Buy a house there. Now I have a visa. Buy a bar, become a bartender. Those are obviously very extreme examples, but it gives you levels of freedom that are uncharted. Taking care of your family, taking care of your friends around you to some extent. All of these things are unlocked with money. So I think for me, there's definitely a second very big driver.
What is the
And
first?
curiosity.
Curiosity, you mentioned, right? Avik, you've been a successful entrepreneur. What common mistake do you see new entrepreneurs are making?
Is building a business to make money.
Right, right,
Now, this is very, very ironic because I just said money is important. Building a business should come from a real need. If you build in a category or you build something that people need, money will come. If you build saying, "Mujhe paisa banana hai, but I'm going to figure it out," odds are you're going to fail. The second thing is not reading enough. There's enough and more free information out there. Yeah. Uh, at this point, you can get Harvard courses, MIT courses, Stanford courses, Yale courses. You don't really need to. I mean, being in there in person is a different experience, but you not being able to afford not or getting admission to a top tier institute is no excuse for ignorance today. If you can afford a smartphone and a 4G connection, and we are blessed to be in a country that has some of the cheapest internet in the world, you can
right.
afford to get
As you
anything.
mentioned, basic thing तो है in online सब कुछ है अभी available information है at least basic things.
If you don't use it, there is no excuse. Just no excuse. Um, Third one is ignoring compliances. For better or worse, we are still a slightly a licensee Raj place. I was literally with like senior government officials from Gujarat yesterday, and we were discussing about how can we reduce some of the penalties for startups because they are young, they're sometimes don't know the right ways of filing, if that they have to file 5, 10, 15 different documents to raise money, to start a company, to run this, to run that. And they were very receptive. They understood the problem. But I mean, that change will take time. Till then, understand the compliances, understand finance. Again, point number two, resources are free, they are available, learn. If you don't understand how to do finance, if you can afford it, pay someone else to do it. If you can't afford it, smartphone hai, internet hai, learn it. Not knowing how to do it is inexcusable.
Avik, what advice would you like to give someone looking to start their own business?
Don't do it. It's extremely painful. The chances of success are quite low. And if you're doing it for the wrong reasons, which is to get rich, yeah, career karo. Go find a high paying career, private equity, consulting again. Doctors still make good money.
Right.
There are a whole bunch of new career options that are coming out today. Become an AI expert and go and join and become an AI consultant. Yeah. Kuch bhi karo, do anything, but take a nice corporate career and be comfortable. Do
राइट,
that.
स्किल सेट पे ध्यान दे सकता है कोई एआई पे आपने जैसा बोला, लेकिन
Become an expert, go deep and just build and live a nice corporate career. Don't, why are you building a business? Building a business
राइट,
should typically happen when you feel this burning need to solve a problem. And which is why typically when I see these kids in their 20s who say, "Sir, we want to solve this problem," I'm like, "Baba, you don't know enough of the world to know that this is a problem. You keep saying this is a problem. I keep telling you this is not a problem." But they will want to have this five levels of arguments with me saying, "No, this is a problem." I'm like, okay, go build, try it.